Okay, so here we are. We're starting the weekly time frame. Number one thing that I saw going into this week was the price range we're dealing with. Okay, disregard the actual printed week here. What we're looking at is when we started this week, where were we in relationship to the weekly price range? If this is low and this is high right here, then I would say that we were at equilibriums. That's where we were trading in last week. So meaning we were at a premium of we were barely in a premium of the weekly range, but we still were indecisive. We needed more information. That's the number one thing I would point out on the weekly. Other than that, I'm not looking at this swing alone. This is a swing within the parent swing. So we needed information on the daily. So that's where I would start on the weekly, and that's all I would consider is where are we in relationship to the weekly order flow or interbank order flow. Now, going into the daily where we're going to actually get our markups going. Okay, so here we are on the daily time frame. I'm going to post some higher time frame markups here, and we're going to talk about them. So here are the higher time frame markups, right? I want to point this out to you. Last week we traded into this fair value gap. We were anticipating price to run into this gap and trade lower. That was obviously not the game plan. If you can see last week's price action, you can see that we ran into the fair value gap and then closed ultimately Friday in a premium of this range. So we still needed more information coming into this week. So with that said, we were looking for higher prices. Why? We have a swing low, a swing high. We've already came down to a discount. There's no reason to trade lower. So my bias for the week was bullish on the DXY. Okay, did I understand how deep it was going to go? No, but I understood the first objective was to get above this daily bearish order block, right? Above this was buy side liquidity. So in terms of a daily markup, fam, we don't really need to clutter the chart with a bunch of different things, and we don't need to look at this price spike. We're looking at where the right side is likely to draw to, and it was buy side. Okay, so now I'm gonna go down to the 1 hour time frame, and we're gonna get more in depth about what we were looking for on the DXY. So right off the bat, Monday, we see Monday's price action here. Monday comes down and fails to trade lower. You see it right here in London. It fails to trade lower, and we get a displacement above previous day high. If you're writing notes, that in itself creates a bullish bias for the week. It creates a bullish bias because number one, you can't say, well, when we get up here, we might be shorting. We did have an objective to get from here to here. Did price offer a short here? It sure did. And if that's your protocol as an intraday trader, then you could have taken advantage of that. But ultimately, price never wanted to get above the balanced price range. I'm going to put on the balanced price range so you can see what I'm talking about here. Okay, so this is the balanced price range. So if you were anticipating for the DXY to get into this range here, which is the daily order block, and then to go short, you would have taken this. Now, anybody who is trading with me knows that we had a signal sent out and that we did take these buys. We took these buys on Eurodollar, and we took it down to this level because this is where we needed to see the inefficiency filled. So when we have a balanced price range, we have sell side delivery, buy side delivery. When price comes back through this, this is redelivery. When price comes down in this strong down candle, that's rebalanced. And then what do we get? A pushback up, failure to trade higher. This is what made this week hard for anybody who is trying to day trade. It's very difficult to trade a range bound market. This is a scalper's paradise, a balanced price range and a daily order block. You're trading between both. So understanding the type of trader you are could have been to your advantage. Okay. We also were looking at this day here, and we'll talk about that later when we go to EU. Ultimately, the moment that price on Thursday runs above these highs, we have a model that's very common. This is a very common model. Bullish Thursday, pullback, continuation. Like this is what it would look like on a weekly model. And if you remind me, if you could send me a DM, I'll send you the ICT weekly model so you can see what this is. But ultimately, I don't want to spend any more time on this. We were bullish on Dixie. Our first stop was to get above buy side liquidity right here. The moment it did that, this was all extra. I can't tell you with confidence that I knew for sure was coming up here. I knew it was going above buy side liquidity. And just knowing that alone tells me that I have the right direction. And if you have the direction right, you can then manage your trade based on what you see. All right, so if anybody doesn't have any questions, I'm going to move on to GBP USD. GBP USD weekly time frame. Again, I'm doing the same thing. I want to know on the weekly where we are in relationship to the actual dealing range. Again, trading at equilibrium. Now, here's something to note before this week actually happened. We have a swing low, right? The 3 candle pattern. This candle trades the lowest. The one to the left fails to trade lower. One to the right fails to trade lower. That makes our swing low. We reach this premium of the price leg, right? Which is 50% on the weekly, but on the daily, it's a premium. We hit an imbalance. What happens? We get an up close day. Next day, we get a down close day running previous day low. Hint, hint. I'm sorry, previous week low. Hint, hint. If we run previous week low, we effectively have a swing low, swing high. Objectively speaking, we should be looking for lower prices because the 4th candle should expand above the 1st candle swing. That's a big note take right there. These 3 candles made a swing low on the weekly. The 4th candle is this one. It objectively completed what it needed to do according to what algorithm seeking, getting above this high. Same thing here. 1, 2, 3 candles. This candle objectively got to the bullish order block. Therefore, we understood the draw on liquidity was here. Moving on to the daily. I wasn't a fan of GBP USD this week, by the way. Okay, so here's the daily time frame. And as you can see, there's a lot of range in the week that we just finished, right? This week here was a lot of range, but to the downside, and then it consolidated. So coming into this week, we immediately seek buy side delivery. Why? Because it was looking to establish high of the week. Now you're not gonna be able to see it until I get into the intraday timeframes, but let me show you the higher time frame markup here. So here's the target, right? This is the weekly bullish order block. This is the target if you were looking for sell side. And here's the higher time frame levels that it was working on. So all of this was an accumulation to distribute price lower. Now, one thing I want to bring your attention to is this right here. So you see that these last 2 up candles created a bearish order block. Price never wanted to trade above that. To me, that gives me a lot of information to know that GBP ultimately was just holding and waiting for Euro to catch up. I think GBP sold down a little faster than Euro did. So we can talk about SMT another time, but just looking at the daily time frame, this was significant to understand. Monday and Tuesday failing to trade higher made it a bearish bias. Remember, we don't trade Mondays. We use Mondays to collect data so that we can understand what the weekly template's likely to unfold as. Moving on to the 4-hour time frame, because as you can see, we can't really do much with this bullish order block on the daily. We can maybe outline the balanced price range, but I don't want to complicate that. Let's just go to the 4-hour and I'll show you. There's a balanced price range here between these last down candles and these up candles. This creates the balanced price range. And this is what we danced on. This right here is what basically created the bullish sentiment. Why? Because we had a run on sell side, and then we had a turtle soup long running above this high. This made everybody bullish. This created the sentiment to be very bullish, and then what happened? Sloppy movement to the downside. Ultimately, price did not want to trade higher. So when you start to see range-bound markets and you start to see big candles coming in, ask yourself, what are they reaching for? Remember, I told you to keep your eye focused on this? Daily bearish order block. They didn't want to trade above it. Moving on to the 1-hour. Now, GBP USD on the 1-hour offered multiple opportunities, especially if you understood this markup that I'm going to put here. Here's the intraday markup. So we have a low resistance liquidity run, and we have a low resistance liquidity run over here. What does that mean? In other words, when price is delivering to the downside, these higher lows are more likely to be ran. If this was a lower low prior to trading higher, it would be a high resistance liquidity run. Okay, so when price trades down into this 4-hour BPR, look at the reaction, fam. I'm going to zoom in so you can see it. The reaction of these last two down candles was very, very, very quick. Look at the speed to the upside, and this is London. So from an intraday standpoint, if you understood this run on stops, and if you highlight the Asian range from 8 o'clock to midnight, it's an aggressive run below previous day low and below previous week low. So this was an insane amount of liquidity taken here. And then they push up. The moment that this wick comes above this high, that's a market structure shift right there. And then when we get a retest in New York, as New York traders, this is a continuation move into this order block. So a lot of the time people seem to misunderstand what order blocks are. It's not just the last down candle. It's the series of down candles that create a change in the state of delivery, leaving fair value behind. That's what an order block is. So when price comes down and displaces, this created a high probability long in New York. So with the benefit of hindsight, fam, you have to understand that like this is what you should be studying when you look back at price. Also, this is weekly open price here. So we went below the open price, and then we displaced higher. How many pips did we go below open price of the week? 58 pips. So this is like a level 2 turtle soup long. It ran down and pushed up, gave OTE, gone. It didn't give OTE, I'm sorry. It gave you a continuation buy in New York. OTE would have been down here, but it didn't need to come down here because look at the aggressive run on stops. That's a note. OTE will not present itself when you see a turtle soup long, okay? Most of the time it will not present itself in New York. Because if you see an aggressive run on stops, 60 pips on GU, there's no reason to go lower if they're trying to go higher. Okay? Now, the moment that this happened, you see this displacement here? It's above the order block and it's above previous day high. The moment that Wednesday starts to trade lower in London, this is something really important to highlight, and that's why I wanted to do GBP next. So this right here is London's trading session. Look at the displacement down here. For all of you that get chopped up in the market because you're not paying attention, this is a swing high and this is a swing low, isn't it? And it's a break of structure right here. And you have this gap that was completely disrespected, right? There was no respect. It did not want to hold here for support. It ran straight through it with displacement, break of structure. This is your classic OTE right here in New York. Classic. There is no reason why you should have been thinking longs. If you went long on Wednesday, you should, Wednesday, you need to go in your journal and write a note. I failed to realize there was a break of structure, a full run on a gap with a full strong down candle close in London. I wake up in New York. I should have been thinking shorts, not longs, shorts. That's a big highlight for GBP USD. And as you can see, same thing happens again the next day. Look, displacement, swing low, swing high, run below this low. That's a break of structure. What's the difference though? Price trades higher than the London range. It runs London's high into the bounce price range, into the order block, and then shorts. So you don't get OTE. One question you might ask is, well, why did it run London's high? Because guess what, fam? We're in a discount from this low to this high. So understanding price ranges will help you to understand that. Look, this is 50%, the bottom of the balanced price range. We were down here in London. So by New York, 7 o'clock, we were already up here. So that's one thing to highlight. If this is New York session right here, this is New York kill zone right here. If this is New York and this is London, we're already in a premium close to London's high. We should see a run on stops followed by a displacement down. On the 15-minute time frame, that would be a breaker block. Okay? We're not going to go down there because we're going to look at a Friday setup. Ultimately, at this point, you should not be thinking buys. you should be looking at the sell side delivery because we've already reached every buy side objective. Now, going into Friday. Friday is a very, very, very important setup here. I'm going to put it on the chart. So this is a thank God it's Friday setup here, fam. We're already proven to be bearish. We already see the equal lows established, the relative equal lows. We already see that this is the current low of the week. What reason do we have other than it clearly being bearish to go long? There's no reason. This is a simple breaker block. Order flow on our side. Order flow is bearish. Narrative is bearish. We have a breaker block, and it's during the London Open kill zone. And not only do they give you this in London right here. Look at what they give you in London. A complete displacement below these equal lows. Did they run the low of the week? No, they did not. So now if you're thinking like you missed, oh, I should have traded London, I should have been up for London, I missed my setup in New York. Well, guess what? This is New York. This is New York right here. 7 o'clock, New York session. Let me show you exactly how sometimes it's just better to wait for New York. So here's New York session, right? If you thought you missed out because it tanked in London, guess what? This right here, from this high to this low, offered OTE. You might be saying to yourself, well, it was in a discount, so it should have went to a premium. I wanted it to come up here. Remember what I said on this GBP chart like several times now. It displaced and broke structure. It does not need to come back up here. It only came up here on this day because we were in a discount of this range. We've run this range now. So therefore, when you wake up in New York and you see this right here at 7:45 in the morning, you got to be thinking to yourself, okay, I'm thinking OTE, right? I'm thinking OTE, bearish order block with fair value gap there. That's what I'm thinking. That's what you should be thinking. If you took the other side, write in your journal. I was thinking the wrong thing, but looking back, I understand what my eyes need to be trained to see. We need to be able to understand price lags and knowing how to draw our fib. So GBP USD, fam, was an absolute amazing pair to trade on the sell side from Wednesday through Friday. Okay, and obviously they rush down. When you start seeing this speed, this is a macro objective being reached, and that's the daily busy. All right, if there's not any questions, I'm going to move on to the euro dollar. Again, we're going to stick to the same pattern that we've been doing the entire time. Weekly time frame. Where are we on the weekly price dealing range? Equilibrium starting the week. What does that mean? Why do I keep saying that? I want to know on the weekly where I'm at so that when I look at the daily, I can understand why we've been consolidating at it. You will always see consolidations at equilibrium. And when I put the daily markup, you'll start to see, oh, okay, well, let me go back to the weekly for a second. There's a level I wanted to put on there. So this 50% also runs at the same level of this SIBI. So if you want to simplify your markups, do what I'm doing right now. Find the range that's on the weekly, look at what price is traded into, and mark the gap, the premium level of the gap. They're trying to create a swing high here if they don't go bullish. They fail to take out this week's high. This is going to be a swing high. And objectively speaking, what would be the two places for price to reach for? It's either going to be this gap here or this order block. Those are the only two objectives to the downside that the euro dollar could have been reaching for. Moving on to the daily. Okay, so here we are on the daily. We know we know that we're trading at equilibrium. So what is holding it? What is holding support at these lows? See this Bullish fair value gap here. Boom, there it is. So that is what's holding price up. And this is what was enticing buyers. Lots of bullish people, lots of smart money traders thinking they know what they're doing, and they got chopped up because they thought that this was holding support. Let me tell you something. Does any of this chart look bullish to you? No, it's bearish. This is 2021 and this is 2022. Every buy resulted in a bigger sell. So if you didn't know, now you know. The order flow is bearish. Okay, order flow is absolutely bearish, meaning higher time frame is bearish. So when the narrative lines up with the higher time frame being bearish, you have double the confluence to be going short. Let's add some more markups. What were they reaching for? Bullish order block, mean threshold. This also lines up with the bound price range, but we don't care about that. Okay, and that's it. That's all we needed to mark on the daily. Normally, I don't even have these labels on here. I just have the lines, and I put them really light because I don't want them to get in the way of the price action I'm trying to read. All right, moving on to the 1 hour. So here we are on the 1 hour time frame. The week starts here. Let's put in weekly open price. Okay, and this is what we have. We start the week right here. Euro USD was bay for me this week. I killed it on this pair. So I didn't trade Monday, and Monday told me what I needed to know. They ran down to the discount. At this point, I was anticipating for price to buy on Tuesday. Why? Because the fair value gap's right here, and there's an order. The fair value gap on the daily's right here, and there's a fair value gap right here. This is Asia session. This was an easy scalp right here. Run on Asia session into daily fair value gap, looking for it to displace higher. Boom, we took this. Signal was sent here. We took this and we nailed it. On top of that, we have a market structure shift right here, right? When we run this high. So what does this create for us? Objectively speaking, we're in a bullish retracement in an overall bearish market, right? That's consolidating. It's consolidating in a premium, but the thing is, from weekly price open down to here, there's no reason, objectively speaking, to be looking for lower prices. And the moment we get this displacement here, we should be seeing an OTE. So we also took this buy here. For anybody in the signal group, we took this buy. We caught the low of this. It was absolutely amazing. We ran up, we took profits here, and it ran up a little higher. Actually, no, we actually took profits at the 4 hour objective. That doesn't matter. The point is, we caught the buy. We knew where to go break even was above here or to start taking partials. I promised you an intraday markup, and here it is. Do I want you to mark your charts like this? No, I do not. But the point I'm making here is, if you're going to study, this is what you need to do. You need to understand what the tendencies of each session are, and you need to be looking at what price is reaching for. Objective and draw. Remember that. And the Good Eats motto is analysis, framework, execution. So looking at the buy stops and sell stops, the high and lows of Asia, this first run up here created a stop point. I'm calling it a stop point. Really, it's a smart money reversal, but it's a stop point. It's a run above highs, and then they displace down. You see the OTE offered right here. This is OTE. Again, if you get good at this OTE, I'm telling you, you guys are, y'all gonna be killing it. You're gonna be killing it. Okay, it's OTE. Whether you want to realize it or not, it's OTE. Even if it comes to 50%, swing high, swing low, pulls back up into an order block. You should be going short. Okay, what happens here? We enter London session and they run below the lows. So for anybody who gets confused about this, you have to have a bias so you know what you're looking for. On this day, we were looking for longs. We wanted it to trade into this gap. Well, they ran the highs first and then they ran the lows. There was only one place to go, fam, up. So you wait for price to actually get out of this range and then you get one candle. This isn't good enough for a lot of people here. This one candle is not good enough for a lot of people. So maybe you missed this. Well, guess what? Now we're above weekly open price. We're still in London. This is a breaker block. Low, a high, runs below these lows, right? And we trade back into it. So this was an opportunity, if you're still awake at 4 a.m., to get in this buy. And what are you targeting? Pre-London high, right? And then that's it. Guess what? London, you thought you knew what you were doing with London? It came back down and broke structure again and shorted. So what is this? What would you call that? If price goes up, then down, then up, then down. Is that a trending market? No, it's a consolidation. Therefore, there was probably a news event today. So what you're looking at is a market that's offering buy side and sell side. It's not high probability. Is there trades offered? Clearly, but that's why we're on the 3-minute time frame. These aren't little pips, guys. 36 pips, 40 pips, that can make you rich. Anyways, price decides in the end of London and London lunch to trade lower. By the time we start New York, look at where we are. We're down here. We have the London low right there. And this was the objective. We wanted to get down to the daily fair value gap. So if you had shorted up here, you should be taking profit after it runs this low. If you're a New York trader, you're looking at London like that was a range bound market. I'm waiting for a run on stops and a continuation move to the upside. So what I wrote here is the AMD. It accumulated for the first hour and 30 minutes. It manipulated price, meaning it ran stops again. So we had a stop run here, and then we had another rerun on stops, right? That creates a turtle soup long. So accumulation, manipulation, distribution, all the way up to this high. Now, notice it didn't get all the way up to this high. And right here, it started pulling back. Now, for all of the people who trade breakouts, right? They trade breakouts. They're starting to freak out because now their breakout that where they were up 31 pips comes all the way down and they're only up 9 pips and they close. They close their trade. But what they don't realize is that all price was doing was returning to fair value. You see this swing here? This is what you need to be looking at. This is called a continuous swing. So you're not going to run your fib from this low to high. You won't get OTE. But if you run your fib from this low to this high, then you get OTE with a fair value gap. And that's the London close continuation move above the buy stops. I highlighted this fair value gap. I don't want any of you to think that you should be trading beyond the true day range, midnight to 12. That doesn't mean there's not setups. And it did go higher, but this isn't what it's about. You're going to hold this and then look where it ends up all the way down here and you end up getting stopped out. All right. So that's the intraday price action that I promised that I would go through. Just know the reason why I went through this is to explain to you that when the market is ranging like this in London, there's plenty of opportunity if you're a bad boy or a bad girl. You know what I'm saying? Like you just got to know where the objectives are. So one thing I would tell everybody, if you're, I had a couple of my mentor students do this as an exercise. Okay. And I'm going to read to you exactly what the exercise is. And some of my students are here. Don't feel cheated. They didn't get the one-on-ones with me. Okay. I'm just telling you exactly how it is. So what would be the objective? If this was a homework assignment for you, what would I want you to be doing, right? I would want you to write out the session times, Asia, London, New York, London close. I'd want you to highlight the buy stops and sell stops of each session, okay? I would want you to take note of what happened. That's right, Nafis, in each session. I want you to realize and annotate in your journals, why did price run highs and lows? And then at some point, I would want you to realize, oh, London was just ranging. In other words, it offered scalpers multiple opportunities to gain, pips in the market. I would want you to also highlight every stop hunt, because what you're going to see is price aggressively runs the stops and then displaces the other way. After the displacement, it always offered OTE every time. I would want you to write that in your notes. I would also want you to write during the session that you trade the AMD, the accumulation, manipulation, and distribution, so that you can start to train your eyes to see power of 3. That's what AMD means. It's just the power of 3. Open, high, low, close. Okay? And this is an assignment that you can do and journal so that you can go back and say, hey, oh, I understand what's going on. I really had multiple opportunity to make money in the markets. On this day, we just took the buys. We just waited for it to get to our point of interest. And if that's who you are, you don't want to be trading too much. You just want to get in and get out like right at the end of the session. Then just wait for it to get to your point of interest because it came right to it. You know. And for those of you who don't know why price stopped up here, there was a 1 hour fair value gap here. That's why it stopped here. All right. And we got some questions. If you trade London, look at Asia. If you trade New York, look at London. That's right. We want to be looking at previous dealing ranges of each session because that's what's going to help you as an intraday scalper or intraday trader. You need to know where the next draw is, what the objective is, and where the next draw is. So let's talk about something that happened to me. Okay. I'm not a perfect trader. You think I win all the time? I did win a lot this week, but I did close some trades early and I did take some losses this week. What I want to show you is this Friday here. So everybody saw that we came down to this daily fair value gap. Oh boy, you know how many people wanted to buy down here? Everybody was looking for buys, right? And look at this reaction in Asia. Oh, it's going up. Everybody's got their eyes on this fair value gap here. This is what they're thinking. Okay, it's coming up here. And let me tell you something. Early on in London, I wasn't a buy. And I was anticipating it to come up here. But guess what happened here? I'm going to go down to the 15-minute time frame. So here is your London session. That's absolute garbage. We're still at consequent encroachment of the gap. So here I am. I took this buy down here because I'm thinking to myself, man, they're failing to trade lower. You know, I bought here and then it gets up here and I'm thinking to myself, man, they're failing to trade higher. Mind you, you know how much time I spent looking at this chart from 12 all the way to this high here is 3:30 in the morning. That's 3.5 hours of you sitting on your ass waiting for price to displace. Okay, me and my mentor were on the call, sitting here like don't get me wrong, I dropped 2 lots on this. I still made money on this little move here, but we were getting tired. So here's what I'm gonna write on the screen for you. See this 15-minute order block? It didn't want to break it. You see the sell side liquidity? This was previous day low. The question is, do you have the patience? Do you have the patience to sit here? And mind you, I was on the 1 minute. Do you have the patience to see this play with your feelings like that? Look at what happened here. So we take profit here, and then it gives us the displacement we wanted. Guess what? We entered right here. We entered right here. Right at this gap, we entered, and we were thinking going lower. You know what we did? We closed our trade because we were thinking to ourselves, I'm tired. I want to go to sleep. I'm not about to let 3 hours go by. I got 2 lots on this thing. I'm not about to let time go by. I'll just, let it be. As soon as we closed it and went to bed, it displaced and ran the stops. This is a lesson for anybody who's a big hindsight trader. There's a lot of fucking cappers and a lot of people trading in hindsight, and it pisses me off. This is the kind of shit in a live market where your hindsight will chop your ass up because you're not going to sit here and wait and have the patience, most of you. I didn't have the patience. I closed that bitch, and I just went to bed. Somebody is going to sit here in hindsight and say, oh, I caught that. Yeah, I went to bed and let it go because I knew. You didn't know. That's the benefit of forward testing. Well, here's what I'm going to tell you. Again, just like I said earlier, sometimes we wake up in the morning, we think we missed the whole trade. This is the start of New York. Okay? We're below the sell stops. It's already tanked about, from this high of the day, it's already tanked 56 pips. So you're probably already feeling like you missed the day. Just wait for the next price leg to be completed. You see this one? It runs up and it shorts. All you need to do, fam, is wait for the next price leg and just look at these last up candles before the down move with a break of structure. A pullback to those last up candles that broke structure is a mitigation block. Okay, this is just priced in a discount, trading back up, mitigating and displacing. Look at the displacement at 8:30. I mean, God, you didn't have a second longer than right here, 8:25. You had 5 minutes to get in, and then it was gone, and that was it. Just when you think you run out of time, this is the opportunity that was provided. And this is another thank God it's Friday setup. And what did they rush down? What was the speed towards? To get down to the bullish order block. So, all right, fam, that's euro dollar. Does anybody have any questions before I move on to gold and we wrap? All right, so for any of you who traded gold this week, I'm sure a lot of you got chopped up. Looking at gold. So, gold, people have this conception that gold was bullish, right? We had a nice bull run, and then from there, just been collapsing down. Well, 1, 2, 3 candles makes a swing low, right? Where are we from high to low in the dealing range? Are we in a premium or a discount? We're in a discount. Therefore, price can trade higher still and still be bearish on the weekly time frame. That's all I'm going to say. Going to the daily, you had to be very patient with gold this week. So here's the markups for gold on the daily, okay? So we had our bearish order block, which is what price has been failing to break. And even this week, it failed to break. And then we had our BISI, which price has reacted to now, not once, but 2 times. So what do you call a market that's going up and down between 2 arrays? Consolidation. CPI didn't make price go down. It was used as a catalyst for price to aggressively run stops, entice buyers, and then create those same buyers. Entice buyers, and those same buyers who wanted to buy got stopped out as well, and then they revenge sold. Like that's what happens a lot of the time. So price runs previous week low, aggressive total sub long. I didn't partake in this because I was in shorts and I hit TP and I was done. But just looking at the market, gold was not high probability for day trades. It's high probability for scalpers. So that's what I did. I scalped gold. Moving on to the 4-hour time frame. There was a gap on the 4-hour time frame that just would not budge. It would not budge. And when I put it on the chart, you're going to see what I'm talking about. So here's the intraday markup. Here's weekly open price. This is something I highly recommend all of you to do. Always mark weekly open. Price did not want to trade above weekly open. They just kept on hitting it, going down, going down, going down, going down. So ultimately, I just kept shorting every time it came up here. I was short. Literally just made a bunch of money just shorting gold. But guess what? All of that shorting resulted in a major long. Now, for those of you who are on call with me on Monday in Asia session, I called a long right here on the 5-minute time frame. Y'all made some money with me this week. I was being extra nice. So this right here was where we were at in Asia. It ran stops and it displaced. We were on the call and I said to everybody, if price comes back down to this down candle, I'm buying it and I'm going break even right here, or I'm going to take a partial and leave my stop in place. So I took it on 2 accounts. One account I went break even and took a partial, and the other account I didn't take anything and I just left my stop in place. It objectively ran those highs, pulled up, came back, hit the OB, and ran higher. All of this is 4-hour order block and 1-hour order block, and this thing ran. I held this all the way up to here. That was the only day trade I took on gold. Okay, this was a clean ass buy. Now, that's not what I really want to talk to you about. What I really want to talk to you about is what's going on when you see a chart like this, because we're here to learn. We're not here to talk about my wins. You see the displacement. It makes you want to keep buying gold, doesn't it? But guess what? Right at this time, I took a lot of Asian entries and New York close entries on gold this week. And let me tell you why. Because price was stuck in a consolidation, we had trapped order flow between 2 arrays. I made a point to just say, you know what? I'm trading the setup, not the time, the setup. Because time will align and I will get my profits. So I saw this swing high form, and from this high to this low on the 15-minute time frame, man, is OTE. And I was looking to take out this low and hit the order block. This is a real scalp. Like, I know it's a lot of movement for gold, but 6 points is great. That's a session trade. on gold. Okay, so it came up here, and then guess what? It aggressively runs those stops, hits the order block, and shoots back up. Same thing. I did the same thing on this day. It came back down again. It created a swing high, and it didn't want to trade higher. So in Asia, I saw it pull back up and short it again. Why am I continuing to short in this area? Because it's failing to trade up. It's failing to trade higher. So as a scalper, I just kept shorting it. And this is the short right here that I shorted, and I was targeting what? This order block here, right? I didn't want to get down here. I didn't think we were going to get down here. So I just, as soon as it came down here, I closed. But these kinds of market look sloppy on the 1 hour. You can't read this structure really well. All you know is that it's rejecting at the fair value gap. So this is one of those weeks where the 5 minute, bro, was your best friend. Look at this. Now, for those of you who are in my private chat, you know what I did. As soon as you see this area here, this last down move, and then it comes up and shorts, the moment that it failed to trade higher than that, I looked at this as a balanced price range, right? And I looked at this last 2 up candles as an order block. That's what I was looking at. And I waited for this to fail to reach up here, and then this was OTE. I took this short, fam, and y'all know, because I posted it, I don't be capping. I held this thing, and I said to myself, they're going down. They're going all the way down to 1837. I'm holding. And when I woke up, they sure did. And the rest of the fuckery from the news and everything, I wanted no part of. But what I will tell you, since we're here, is as soon as they hit my objective, bullish order block form, displacement, break of structure. 88% pullback down to the fair value gap again, consequent encroachment. Guys, that's not a short. That's not a short. That's a buy. And you see the result. Friday was very scary. The speed on gold was very scary, which is why I decided I'm good. 14% on an account for a week is more than enough for me. So that's gold, fam. In a nutshell, here's what I would say about gold on the weekly outlook. On the weekly review here. It was a market that only offered 1 day trade on Monday, and a market that offered a wild card on Friday. Everything in between was a scalper's market, failure to trade higher, shorts at 1852 to 1855 all week. That's what I was calling all week, and that's what I did. And that's what you need to do. Looking back at this video when I post it, I want you all to understand that this is a lesson to be learned. When the market is ranging, take profits sooner, pay the trader. When the market is showing unwillingness to trade higher or lower, then use that as resistance or support. There's nothing more to it than that. Look at the breaks of structure and wait for OTE on the FIP. Very simple. All right. So if anybody wants to ask questions, I'm going to go ahead and unmute, but I'm going to end the recording here.